Hey traders, welcome to another educational video from Global FX Education. Today we'll be speaking about a very important concept and a very important method in order for you guys to accept and also adjust your mind to the market, how the market moves every single day. Now, what I'll be explaining in this video is quite simple. It is quite a simple method and quite a simple concept in the market. Tonight we'll be speaking about impulse, correction, and impulse. This is a very important concept so that you can understand how the market moves in a daily basis. Now, if you have watched the market for a long time, or if you've ever been trading for a long time, you will understand that when you see the market in a nice bearish momentum, when the market is in a good bearish momentum, you can see the market creating some sort of wave like this in the market. Okay, you will see the market will create waves in the market, and this is what we call impulse, correction, and impulse. Okay, this move like this, nice trending market, you will see a lot of good impulse, correction, and impulses. So I will be explaining to you tonight what is these impulse, correction, and impulses, and how we can benefit and look for great swing opportunities and also intraday plus scalping opportunities in your future with Global FX Education. Now, very important concept is that we need to understand what an impulse is. So I'm going to explain to you guys what exactly is an impulse. Now, an impulse, for example, is a strong movement, whether it is to the downside in a bearish market or to the upside if it is in a bullish market. Okay, so if the market makes a nice strong movement to the downside, we call this an impulse. This is what we are called an impulse. Okay, so what I'm going to do is let me mark it for you. This is what we call an impulse, that you guys have a bit of a better understanding of what an impulse is. Okay, so we have an impulse. Now, straight after that, if you remember what I said earlier, when the market moves in waves, the market will move in waves like this. I will explain to you guys now what is the correction. We know what the first impulse is. Now we need to find out what the second method means, and this is when the market actually starts to make a retracement or what we call a correction. Okay, so the market will have a strong movement to the downside. Then after that, it will make a correction or pullback or a retracement, whichever you like to call it. It is generally all the same, the same method, but a different taste of the forex market. So the market will create a correction, and after the market creates a correction, we would like to see the market create the next impulse. Okay, so we have correction. Okay, we have another correction, plus we have also the next impulse. Okay, and this is generally looking at higher time frames. You will have a much better view of what the market is doing, and you can understand that when the market creates this type of movement, you know exactly what phase the market is in, and it's very easy to look for a swing trading opportunity. Because just to explain to you guys about how swing trading is actually formed, how we look for swing trading opportunities is very simple and quite easy. If the market creates a very strong movement to the downside, as a swing trader and as an intraday trader or any type of trader, what we should do is we should wait for the market to make a correction first. When the market will create a correction, then only are we interested in looking for a swing opportunity to get into the market in order to catch the next wave to the downside. So in order for us to catch that next opportunity to move to the downside. So we will be entering in this area over here, and we have a very nice risk reward opportunity by trading this type of way. Okay, so as a swing trader, we love to see this type of movement in the market, and it also helps you to understand how the market moves daily, from daily time frame, from monthly time frame, weekly time frame, daily time frame, 4-hour time frame. even the 30-minute, the 1 hour, the 5 minute, the 1 minute time frame. You guys will understand how the market and what type of movement the market is actually in when you look at it. So the most important thing to do if you would like to try to trade this type of method is wait for the market to create a nice push to the downside, or even if it's in a bullish market, wait for the market to create a nice push to the upside. Then what you are going to do is you're going to wait for the market to simply make a move correction to the downside in order for the market to actually make a bigger push to the upside for a bullish market. This is quite an easy concept. But a lot of people will ask you, how do you find this type of entry? Where is the entry point, and what shall we do with the entry point? How do we enter? A lot of questions will be asked, right? So it is quite easy for you guys. I will explain to you guys how to look for a swing trading opportunity as a swing trader and as a basically an intraday trader. In order for you to look for an entry on this type of momentum or this type of movement in the market, it is very, very simple. If the market creates an impulse to the downside, what we are going to do, very, very easy. We take our Fibonacci from the high over here of the impulse to the low of the impulse. Once the impulse has stopped, you will see that the market will start to reverse and start to create a correction. Okay, so what we need to do is take our Fibonacci from the high of the impulse to the low of the impulse. And you will see that there will be a lot of different types of levels in the market that the market can come up to retest before it actually starts to go down. So the market will start a correction and it will move up. Before the market actually starts to move back down, it will test one of the Fibonacci levels mentioned here in this diagram before it actually starts to move to the downside to create this beautiful impulse, correction, and impulse pattern. Okay, so the Fibonacci retracement tool is a swing trading tool that will help you to understand and also help you to profit very, very nicely with good swing trading opportunities in the market. If the market will retest these Fibonacci levels, you have a very, very good opportunity. Now, I cannot give you guys too much information in this video about which level that the market will retest, but what I can tell you guys is that the 61.8 and the 382 is the strongest levels, or one of the strongest levels in the Fibonacci retracement tool, and the market loves to test these types of levels. So without that said, I hope that this video was interesting for you guys, and let me show you guys a quick chart that you guys can have a look at. So if we look at this diagram over here that I've if you look at this diagram over here, okay, let me just move this away. If you look at this chart that I have for you guys over here, you guys can see that quite clearly on the pair on the 4-hour time frame. You can see the market has created a very, very nice impulse to the downside. So we have a good impulse. Now what we need from the market is we need that the market to make a correction. Okay, we need the market to make a correction. And when the market will make a correction, then only are we looking for an opportunity. So right now, as we speak, the market made this beautiful impulse to the downside. And what we can expect after a big impulse like this is, of course, we expect the market to make a correction. So we need to see the market moving to the upside in order for the market to actually make a bigger move to the downside. Quite simple. If you take your Fibonacci from the high of this impulse over here to the low of this impulse here, you can see the market where is the strongest levels of the Fibonacci retracement tool, and For me, I will be waiting around this area over here for a good correction to happen before I'm going to actually look for a swing trading opportunity. So you need to wait until the market makes a good correction before you can actually make any sort of decision by trading this type of pair. So we'll have a good impulse correction, and we will also have a good next impulse to the downside, creating that lower high. Okay, I hope that this video was educational for you guys, and I hope that you enjoyed it. If you did, please make sure that you hit the like button. Let me know in the comments area if you have any questions, and don't forget to follow my YouTube channel, www.globalfxeducation.com, and also all my social media will be in the link below. Make sure that you guys look at the social media because there's a lot of educational things that I will give to you guys. And I hope that everyone stays safe. Have a lovely evening, and I will see you guys in the next educational video. Thank you. Goodbye.